Welcome out to another Trading Justice podcast. Super excited to do a podcast with my brother Matt. This is Mark. We're the Justice Brothers from Tackle Trading. Very key technical battle, tariffs in the news. We got a lot of interesting stocks to talk about. I'm going to have a brief conversation on puts, not the buy the put kind, the Fed and Trump put kind.
Where is that put?
Where is that put? We're going to have a little conversation in the middle of the podcast on that. Before we get going into any of that, we have a fantastic technical analysis. Is so extremely helpful in these markets. Holy cow. I don't know how you navigate this current. This is not a set it and forget it. Oh my goodness, trends that never end. This is a know your key points, know your levels, know your intraday, know technicals. It is a lifesaver in this market. We have a fantastic event coming up April 7th and 8th. Master Trader, it is our foundational event where we teach some of these foundational concepts. Talk a little bit about it, Matt.
Yeah, it's a great class. 2-day class, April 7th and 8th, 6 p.m. Eastern Standard Time. We teach technical analysis on night 1. We get into application as well as option strategies on night 2. And it also has a 6-hour on-demand that goes along with it. It truly is a great class, especially for new traders that are just starting out and they want to have that answer of where do I start? Well, here's the answer. You start in Master Trader. That is your start. And for veteran traders coming back to the market and want to refresh your skill set and even advanced, yes, I go through advanced technicals as well on as we get into night 2, just to kind of, test where they're at a little bit. But we have a lot of fun in Master Trader, and we're going to have a great time on April 7th and 8th. And the beautiful thing about this course is it is free if you are a pro member of Tackle Trading. And so the only thing you have to do is sign up for a free trial and then get registered for Master Trader and start your journey as a trader. It's going to be a beautiful thing. And one last thought on the technical side of the equation, Mark, you're absolutely right. I don't understand. Well, everybody's going to navigate the current market landscape the way they are trained, right?
Yes.
But for me, I don't understand how people navigate this, any pullback in the market. I don't care if it's a flag, a retracement, a correction, what we're going through right now. I honestly do not understand how people navigate the financial world in these conditions without the understanding of technical analysis. And so, yes, I absolutely agree with you. I'm not just pitching technical analysis. It is the end all be all of analysis when it comes to what the current market is thinking about the current environment. And so definitely come check it out. Going to have a lot of fun.
Yeah, we'll talk about this key technical battle. We didn't spend much time on it last week. We will spend a few minutes on it this week. But Matt, I want to walk through the week that was, because this was a very interesting week. It wasn't boring. We ended lower, but it started with a bang, right? It started with a bang. We had that gap up we had on, and I want to get your take on this. So the week starts off overnight on the weekend heading in. It'll be interesting to see if we get a little bit of this weekend. Both Bloomberg and the Wall Street Journal reported that the coming tariffs were not going to be as big as anticipated, that they would be targeted. In fact, both specifically cited incorrectly that autos and sector-specific tariffs would not be part of the package. Right.
So we found out the hard way.
So one, either they were lying, trying to pump a rally. 2, they were misinformed. Or 3, they got the correct information.
The Wall Street Journal is not going to try to pump a rally. That's not what they do.
So they were misinformed, or the story changed during the week.
I'm not sure the story changed, but I have felt like there is political messaging going along with the tariff conversation right now. And in the last week, I have heard multiple different ways of describing the tariff environment coming out of the Wall Street Journal, coming out of major financial media, coming out of the political realm as well. And the messaging on that tariff side of the equation right now is it's not going to be as bad. It's going to be more targeted than you think. It's not going to be universal. It's going to be it's not going to be as bad as you think. That's been the general message. And over the last couple of days, as we're approaching that Liberation Day where reciprocal tariffs go live, and obviously some other tariff plan there as well, that's the ultimate concern is this going to be a universal application? kind of what we saw out of the auto tariffs on Wednesday, or are we going to see just the reciprocal side of the equation plus targeted tariffs? Now, that's going to be a very important part of the puzzle here if it's targeted versus universal. But it's an important week to understand that tariff conversation. We're going through Liberation Day this week, so it's going to be.
I mean, it is the market story. I mean, you have an unemployment report this Friday. I didn't even put it in my notes to talk about it. There were a few things I wanted.
It's not going to matter until Friday
because it's not going to matter. And what matters is market reaction to the tariffs and to understand that there are scenarios that are really good. And if you see positive price movement, it will be rational. And if you see negative price movement, it will be rational, right? To have that on your radar as we head into Wednesday. Now, Monday and Tuesday's price action might be a lot of this and that, rumor, speculation.
Yeah,
right?
I actually think you might get a little bit more volatility in front of the news announcement than after.
That would be a typical situation. So, as we progress towards the week, Matt, tariffs were not the only story last week, a little tariff hope, but you had some negative tech stories that we'll talk about in stocks in the news in a few minutes on Wednesday, kind of created some downward momentum in tech. But then it was on Friday that things got really cranky. They got cranky. There were some comments out of Canada's prime minister on Thursday that got me a little unsettled about this and that. Trump and Carney have had a call since. Both said, hey, good words were exchanged.
Read out of the call, and I didn't personally take either one of their interpretations of the actual call itself as negative.
No, it was actually very
I thought it was actually a positive readout on both sides of the ledger there. Obviously, Carney's comments going like before that.
But this was heading into the market session.
I was a little nervous to read the readout on that.
Yeah, and then so you had this trade tension, and so heading into Friday, the auto tariffs were announced. That was not expected. Bloomberg and Wall Street Journal said it wasn't coming. It came. Yeah. Then you have an inflationary report on Friday that is hot, and then you have consumer confidence numbers that stunk up the joint. Heading into a weekend, you are coming into open technical space. You broke intraday support levels. You had just a plethora of bad news or negative news. And, well, there just wasn't a bid on Friday. And so you came down to support. And so that's kind of what happened, in the price action this week. What was your take on inflation and the numbers on Friday?
I'll tell you, my takes in these market conditions are usually relegated to very small timeframes, intraday timeframes, and so on and so forth. The economic reporting conditions, I don't know about you, but they have taken a backseat to me in the current environment. To me, it's really the understanding how the market is pricing in certain intraday factors, but that's more of a tackle traded pro conversation, we'll say. For here on the economic side of the equation, it's obviously the tariff news on coming into this week with the autos. That was kind of the wrench that was thrown in, that we didn't know there was that variable, and the market obviously got shaken by that news a little bit on Thursday and Friday. Quite frankly, GM, Ford, Stellantis all got hit pretty hard. Tesla actually held in pretty decent on that news. But as for the economic reports coming into Friday specifically, to me, was not necessarily the final GDP report on Thursday, or even the PCE price index on Friday. Friday's report on the PCE price index, we saw a lot of inflation up, and I saw a lot of people associating the causation of inflation up and the market down on Friday. That wasn't my read. My read was, and again, maybe I'm right, maybe I'm wrong here, but I took Friday as a capitulation day. And what I mean by that was, Mark, you and I about 6 weeks ago had a conversation on the cranky consumer. And we talked about how the consumer, we were starting to see data on the consumer side of the equation. And this was 6 weeks ago that was very concerning. And it was after Walmart reported earnings and said the consumer's cranky and they're not going to be spending as much money. So it's
and
not
you
like
need to pay attention to this.
Yeah. And when Walmart, the biggest retail company in the world, says that, you have to pay attention. And so Walmart said that. And ever since then, we've seen, and it was even happening before Walmart, but ever since Walmart, we have not seen a positive data point on the consumer.
Not one.
Even though you and I haven't really been talking about the consumer in the last couple of weeks, because we've been talking about it 6 weeks ago, right? So we don't need to have that conversation this week or last week. We probably should, since the rest of the world was having it. We had it 6 weeks. The rest of the world had it last week. And on Friday, I kind of feel like the rest of the market and the rest of the world woke up to the concern on the American consumer a little bit, because the average American, the average investor, the average trader, they don't look at the economic landscape every day like you and I do, Mark, and like other people do. They only see it when it gets into the headlines. And on Friday, you had slight bump in PCE, okay? Not exactly a headline that's going to spook people. Not exactly a headline. Ooh, PCE report, the third or fourth most important report on the inflationary side, missed by 0.1%. Ooh, that's not a headline that is going to cause fear in the market oftentimes. And I called you on Friday when I was getting ready to write the newsletter, and I said, I don't believe the market's selling on PCE. In fact, I've seen this exact same PCE report a billion other times when the market didn't sell it. Why I think the market sold and why I think it was a capitulation event on Friday was the headline out of the University of Michigan Consumer Sentiment Report. That wasn't consumer sentiment came in at 57 versus a 57.9 miss. Nobody cares about that miss on the Consumer Sentiment Report. 57.9 versus 57, nobody cares. 0.2% drop from last month. Not a data point that wakes anybody up, quite frankly. So why did I hear on Fox, CNN, MSNBC, all over financial media, all over political media, Friday, and all over it this morning, quite frankly, consumer is so scared. They haven't been this scared since March of 21.
And this is why it's getting
the headline. Yeah. Consumer confidence drops lower than at any point since the pandemic.
No, and this is why it's starting to get CNN and MSNBC and Fox News headlines, is because you're starting to get data points that create headlines, because it's the lowest since then. It's the lowest since then. And so you're starting to get things that make good headlines, and so mainstream news is reporting on it.
Remind the consumer of their confidence levels in the pandemic, and they look at the pandemic as the worst scenario possible. That is going to scare the living daylights out of the consumer. And that's why I saw it as a capitulation event, as a lot of people woke up to this to this deteriorating soft economic condition right now, which is all on the consumer. Now, the ultimate question there for the market isn't, does this capitulation lead to a 30% drop down in price? No, like, consumers lag everything, quite frankly. It's not that. It's does that capitulation event lead to further pressure on Monday morning? That's the question.
Yes.
Not does this mean something 3 weeks from now, because I promise you, we're going to be talking about different things in 3 weeks from now. Guess what happens in 3 weeks from now, Mark? Not tariffs, not any of that. We're going to be talking about banks' earnings is what we're going to be talking about. We're going to be talking about real information coming from the real market, and that is going to be the most important
and this is a good trend
in the future.
And this is a good transition into the technicals. I want to spend about 5-6 minutes on the technicals coming into this week, because there is a question in my head is, do you see a follow-through capitulation type day on Monday? The stage is kind of set. You have an increase in volatility. You have an increase in downward momentum. Some of it will depend on the news flow over the weekend.
I was going to tell me what the Sunday headlines are.
Yeah, because we have seen in this bearish condition over the last 6-7 weeks, Bassett come out on a Sunday and talk about detox and, corrections are healthy. We've seen Trump do an interview. Last week, we saw positive headlines that helped a bump. Weekend news flow has had an oversized impact, more than it normally does by a magnitude.
The political, and I hate this, I do. but the political messaging has been mixed into the economic and financial messaging. And right now you're having both talk about each other. I like a separation of church and state from market versus politics. That's me, but there has been a mix there. Where do you want to go with that?
Yeah, no, I mean, because like, okay, heading into the technicals, because, we could see some volatility depending on the news flow, but it's going to come, that volatility, depending on its gravity, will be coming into a massive, mega, super important support level, one that lines up on multiple time frames, one that has a clear, distinct level. I don't care if you're a moving average guy, a Fibonacci guy, or gal, or, horizontal price levels. This is a big one. This is a significant test. I'm bearish, right? I'm bearish, have been for a while. But as a bear, you need to understand the importance of these support levels as much as a bull. This is a cut both ways because these are major inflection points. The type of inflection points that put bottoms in or put continuation of the pain in for bulls, right? Talk about this. You discussed this in the newsletter. Talk about the significance. Then I got a couple tidbits to throw in on it.
The newsletter, in my technical article this week in the newsletter, I basically talked about two concepts. One was how to understand the depth of the retracement, and depending on where the pivot occurs, what does that typically mean for the momentum condition coming out of it? I thought that was a very important understanding and topic to understand kind of in this current landscape. So that was kind of the first thing I talked about. And the second thing I talked about was, and things I talk about in the newsletter all the time, were the important zones in the market. And basically what I said, Chucky, was from a resistance perspective, I didn't talk about resistance in the newsletter very much this week because this is not a resistance conversation right now. This is that was last week. Last week we talked about resistance because we were going through the bearish retracement. Since the bearish retracement got confirmed at a 38% pivot, you have to really kind of focus on support now. It's you're not having a resistance conversation. You're having a support conversation. And so when you think about support here, and oftentimes you want to understand where support is from a multiple time frame perspective. Where is it? What are the day traders telling us on intraday time frames? What are swing traders telling us on the daily time frame? What are those intermediate position traders telling us on day versus weekly time frames? What are the long-term investors telling us on those longer term time frames, right? And when you look at support, oftentimes I like to do a concept called stacking support, where you can really start understanding how strong this support level is. And the 550 level.
This is, by the way, if you are a new or intermediate trader, this concept Matt is about to discuss is massive. It's
very important.
I've spent more time on this heading into my weekend, my prep for the coming week, than I have on the various quantum physics outcomes of
understanding
tariffs.
how important is 550. Okay. Because when you violate support, oftentimes you're going to go find the next level of support. Support oftentimes does not get built by the market. It will occur oftentimes, but it usually gets built because it comes into a catalyst of support. 550 is the catalyst of support. We're at 555 right now. A negative open, I would expect one coming through the weekend in the futures. But that doesn't mean a cash open on Monday. I think we're going to
yes, you're going to it'll be
futures on Sunday. Yeah. Because international markets are trading a little bit more in tandem with U.S. markets right now. Just ultimate short term on that one. But in terms of so I do expect a negative futures market open. But let's see if 550 holds coming into the cash open. Now, the strength of 550, I labeled this a minor level of support, is how I labeled that. But it's not minor from a psychological perspective. It's minor from a pure technical perspective. Now, when you look at the minor pivot from a pure technical perspective, you have to ultimately ask yourself, is there anything else on a different time frame at that 550 level that supports your thesis that 550 is support? Well, we know it's not a thesis. It was support. It was built by the market 2 weeks ago. And so we know we got a data point at 550. On the weekly chart, we don't have anything else at 550. It's legitimately nothing. It's 550 and then it's 540. 540 would be the next horizontal support level on the weekly chart. When you come out to the monthly chart, you got a support level right there on the 20 monthly, right there about 525. And so when you look at 550, there's not a tremendous amount. I wouldn't call 540 a strong support level. It's horizontal. You want to have vertical association to horizontal levels. When you look at 525, I would say that's a pretty strong level of support around that 20 monthly. So you look at 520, you look at 550 and you say, all right, you better hold, because if you don't hold at 550, you're going to be quick down here to 525. The same way, Mark, we said
it is
like that, you're really quick down.
And I want to add from a moving average perspective, because I'm a moving average guy, it is absolutely massive. This support level from a moving average perspective is massive. It lines up with the 5 quarterly. Now, you might not say the 5 EM quarterly, how could that? Go historically test that bad boy. It is massive. It has a huge tendency to move, to just hold, to say, whatever was going on, it's done, right? You've come down. Those quarterly.
Well, it better hold, because technically you do not like pattern development underneath.
And that's the problem. From a moving average perspective, I got nothing to 525. Nothing.
But that's the ultimate point here.
Yep.
Is even if you do get some decent pattern development this week, you're developing underneath a tremendous amount of overhead, which can act as a tremendous amount of supply side economics. And so the data this week is not going to be setting the tone for whether or not we're going to find a conclusion to this conversation. I wish it did, but we're not getting a conclusion to this conversation this week. We're going to get more volatility, more debate, and ultimately, in my estimation, I really don't care that much from a short-term perspective what transpires this week.
Man, I'm right there with you.
I know it's weird to say, but I don't.
And we're 2 huge macro guys, like
big time macro guys,
like
with opinions on
opinions subjects. On macro. I made a macro call 5-6 weeks ago.
I have lots of opinions on tariffs. I support some of what's going on. I don't support others. So I just kind of put it there. Like, I just leave it there. But to me, if 550 holds here, and I kind of feel like it's David versus Goliath being the momentum coming down, David at 550 saying, I'm going to stand tall. And so, and I have actually gave the analogy in the newsletter I wrote it on the screenshot, that's a minor league support level to better swing the bat like Babe Ruth. The reason I said that was, yes, it's one data point on one time frame, but every trader in the world knows that's the data point. It's not this story is, you don't need to be a master technician to understand the importance of 550. So I have it more as a psychological level than anything else. Even if it holds, I want to be very clear though, even if it holds, that does not mean it's bullish.
Yeah, for me, and this is how I'm approaching it. Like, if 550 breaks, if the quarterly moving average, which ends on Monday, which is the end of the quarter, which I've found very helpful for various tactical reasons. Like, if it breaks, I have to act. If I close below the 5 quarterly on Monday, that will prompt action, because it just will. If I break the horizontal support levels at 550, that will prompt defensive action or even aggressive bearish action. Layered in, continue. But if it holds, that doesn't mean the bull market starts. It could create
no. But it does change the conversation.
But it does change the conversation.
Yes. And this technically is extremely important, because technically everybody has concern of 550 right now. If 550 holds next week, and this is an if A then B scenario, if 550 holds next week, you start seeing the technical lens not through a bearish trend, but now through pattern development. And we have not had that yet. We've had overextended. Okay, now 2 weeks ago in the newsletter, I said, okay, we're now overextended. The low has been put in. We're going to start embracing the bearish retracement phase of this. That was not a direct quote, but that was pretty much the analysis 2 weeks ago.
And that's what happened.
Last week ago was, we're in the bearish retracement. This is a matter of figuring out the depth of the retracement, because the depth of the retracement is going to help us understand the next pattern. Well, that pivoted at a 38% retracement right on the dot at the 200-day moving average, downward pressure in price. It was pretty much textbook from a technical perspective. Now the conversation is, does 550 hold? If 550 holds, technicians are going to start looking at the market not through the lens of, ooh, this scary 10% downward movement in price, but they're going to be looking at the lens through, now, do we see a continuation pattern develop, or do we see a reversal pattern develop? And I'm going to tell you right now, if tackle trade is good on anything, and we are good on a lot of things, one thing we are extremely good at is separating the difference between continuation and reversal analysis. That answer is not going to be made this week. That answer is going to be made over the next few weeks. And guess what? Join me in Master Trader, because we could be breaking down one of the most important reversals in the market simultaneously as I am teaching reversal analysis. It's going to be awesome. It's going to be awesome. But it starts, all technical analysis is an ongoing story told over time. We had a chapter last week, a chapter the week before, a novel the month before. This chapter is now going into, does support hold, and what pattern develops after that. If support doesn't hold, you're going through all it is the continuation of the previous leg, and you would be expecting a 525 support test. If support at 550 holds, we now start talking about, okay, we finally got a double bottom, because a double bottom, like I said, 550 is minor support, Mark. You double bottom that thing, you might as well put cement at 550. And so yeah, no, I think it's very important to kind of watch this 550 level play out. Until then, swing trading's not a great form of trading right now. Day trading, and again, this is textbook cookie cutter. Every time volatility hits the market, you shorten your time frame as a trader. You'll lock down risk graphs, longer term side of the equation. So you either have to, one, extend your horizon or shorten your horizon, but you can't stay where it's choppy. And the choppy still is on the daily chart.
You know, I saw a headline the last couple of days, saw a couple headlines that said nothing good happens under the 200-day moving average. And I would be like, that is factually incorrect.
It's not. It's beautiful reversals with confirmation.
Beautiful. And I want, we do not have time because we are way behind where we wanted to be. But I want you at home to go study the last 20 years, moves behind the 200. Sometimes when they happen, they're really bad. COVID, financial crisis. But you will see there's
more data points of recovery.
Yes. Things absolutely.
You don't, okay, the negative is it's developing underneath the 200. That is an edge to the bear. However, when you get a reversal underneath the 200 and confirmation above the 200, that is like the beautiful bullish signal, Mark. That is like a picture perfect bullish signal, because every shorter duration moving average converges against the breakout channel. And once again, I don't want to geek out on technicals. Join me in Master Trader. We'll do it live.
All right, you only got 2 or 3 minutes to discuss the full multi-frame on gold, silver right now. And copper.
I don't need 2 on gold. Gold's beautiful. Gold has been beautiful.
There's been a winning area of the market, and interesting technical levels we're coming into to start the week, especially gold miners, silver stand out.
If gold goes down to 270, I'm going to say it's beautiful. If gold goes up to 290, I'm going to say it's beautiful. If gold, there is not a scenario where I'm not going to say gold is beautiful on the longer term side of the equation over the next few years. Not going to happen. There are scenarios where we go through stagflation, and there is not a better case study for gold appreciation than stagflation. So if we're going to see stagflation set in the United States for the first time since the 1970s, all I'm going to say is let's learn from the 1970s and what worked out in the 1970s. Commodities did, Mark. Gold did. Silver did. We're talking about some of the biggest runs in commodity history occurred in stagflation. And so, you give me 2 minutes to talk about the commodity landscape, I'm going to talk about the causation of stagflation and gold ownership in that environment. Also, you broke out of another resistance level this week. Silver here, I got a little bit more respect for the technical resistance level on silver. And I do believe in the silver catch-up story at Tackle Trading. You know, we talk about gold and silver every single day. I've been more on the trading side of the silver side of the equation than the gold one, but others have been on the gold side of the equation. Both of them have worked out. The difference is gold's been breaking all-time highs for ever since it broke 2000 mark. I believe me, old podcast listeners will love that call out on the $2,000 breakout. When you're looking at silver here, I love the weekly chart here, but I got respect for 31.5. So I would say development on pattern side of the equation probably warranted at 31.5. And I think the respect there is because of not just the current levels, Mark, but this is part of the great silver boom of the 2010s and 11s. And then when Jamie Dimon forced the CME to raise margin requirements in 2011, the silver boom and gold boom came down. By the way, we should tell that story again. I am still not over that, by the way. But there was a lot of resistance in the mid 30s on that story all the way back. And really, you got a pretty clean pivot right here, right around that 31.5 level as well. And so 31.5 has historical connotation to it. And so that's what multiple time frame is. It's looking at the daily chart, weekly chart, monthly chart, quarterly chart to understand where these real levels are. Because sometimes markets can slice through support and resistance like a hot knife through butter. But most of the time, Mark, when it comes to like a powerful pattern, like the butter is frozen and your knife is not hot. Like it takes a little bit more time. Development at 31.5 is probably warranted here. It was a target for me on the directional side. And so I do expect some development here.
All right. I got a question before we get into stocks and the news and wrap up the podcast. Is the market searching for a put?
I think there are some on Wall Street.
And when I say that, if you don't know what I'm talking about, a Fed put, a Trump put, either a reversal of policies, tariffs being the most thing, or the Fed to come in and save the day.
I think there are some on Wall Street that believe they can push the volatility down to force Trump to capitulate. They have a misread on the president.
That doesn't mean they won't try.
No, I agree, but they have a misread. Trump ain't capitulating to them. Not going to happen. He might capitulate to other things, the farmers, for example. There might be some capitulation on the farmers, and I don't say capitulation as a negative. Call it negotiation with the farmers. I don't see that as a negative. But there might be some of that, on trade. But I'm not sure Trump has a put in the same way that Wall Street thinks there's a put.
Yeah,
I'm not sure Trump capitulates to the short-term pressure against Wall Street complaining, for example. I'm not sure that's the case. I do think Trump would negotiate and capitulate perhaps on some of the tariff side to the farmers if we saw the farmers getting rocked on this. I mean, Mark, they got rocked last time. $12 billion we had to give the farmers. So there's some scenarios where the farmers get pretty beat up here. And so it's going to be interesting to see how, and the farmers support Trump. And so that's why I say that to me would be a little bit more likely than, say, Wall Street punishing the market to the point where Trump's like, "Ooh, we got to save Wall Street." I don't know if that's in Trump's purview right now. In fact, when the NASDAQ was down 2% on Wednesday, somebody asked the president, "Have you seen the NASDAQ?" And he's like, "What did it do today?" Like it was down 2%. He didn't even know. They're doing other things. They got other priorities, and you can debate it if you want, but they have other priorities right now. So I'm not sure they capitulate there. And I don't want to get into the weeds on the signal channel fiasco, but they ain't capitulating on that. Why would they capitulate on the tariff conversation? That's a national security one.
Who I do believe will capitulate, and if you break support, if you head down to that 525 level, I think the Fed put is activated.
Now,
I feel very, and this is where I will be a buyer. I think there are two things. I think at 525, not that that price level matters to these two groups, the White House and the Fed, but that will get headlines of 15% corrections, 18%. Are we heading to a bear market?
Mhm.
I think panic starts to ensue on individuals. I think panic starts to ensue on individuals of retirement counts. And practically speaking, at those levels, if you do not recover in short order, we will, and I am not mincing words, have a pretty significant recession in the back half of this year. The economy might not be, the market might not be the economy, but the economy is the market. You cannot have that swift of decline and have trillions of dollars brought out of the economy and not have it.
And the consumer pull out.
And the consumer's already cranky, right? They ain't getting happier, on that.
Listen, I think it's far more likely to see the Fed put than the Trump put.
Yeah, I think Trump maybe softens a little bit, but you're already seeing that this
again,
language,
whether it's
right?
a soften or not, maybe it's just part of the negotiation. We don't know.
Yeah, but the Fed, absolutely. If this support level goes out, this is the podcast for me.
That's the thing.
You're going down to 5.
The Fed knows more than the government knows what happens to the national economy if the stock market isn't feeding it the billions of dollars that it needs to survive.
Billions. You just doctored evil bad. Yeah, you're like, $1 million.
Yeah, trillions.
Trillions of dollars.
And Mark, these fools at the central bank, they will capitulate.
Yeah, and they will capitulate.
And they will start quantitative easing. Yeah. And I'm not going to get on a soapbox, but I am warning every listener out there, if the central bank embraces corporate socialism
they are
in this environment because of their outlandish belief that it does not cause inflation because they just gift it to the corporations and they just put it in their bank accounts and let it sit there and shore up liquidity and all that, they would be making a horrific mistake downstream on this one. And I will do an hour soapbox where you will not be able to keep me off my utter disgust of all things central bank. If quantitative easing and them embracing corporate socialism and corporate bailouts and Wall Street bailouts instead of the consumer who has been hit over and over and over
it's happening, so deal with it.
4 consecutive years, I'm done. The soapbox will be epic. I will not stop. It will feel like a filibuster on the Senate floor for 72 hours. I am so fed up with corporate socialism. It's the antithesis of what Adam Smith wrote about in The Wealth of Nations. It is the wrong move, and I know they're going to do it.
All right. Fire through a couple stock stories before we wrap up the podcast. I thought there was some interesting. I'm going to start with one negative, get into some positive, end with another negative or weird, however you want to phrase. NVDA had some recycled headlines this week on multiple fronts. It felt like in the Wall Street Journal, Bloomberg at the start of the week, Financial Times in the midweek. Algos are keying off anything these days to go up or down. Not surprising in the environment we're in, but Financial Times reported that
Financial Times, once again, is China's propaganda firm.
China's national development has introduced efficiency rules that would block NVIDIA's H220 chips. Semiconductors haven't been able to catch a bid since that report, even though, Matt, the report is
2 years old.
Yeah. Like
it came out, that initial regulation came out in 23. And NVIDIA specifically has been under tariff watch with China forever, it feels like. The H20 chip is an older chip. It's not part of the newer age chips, but to me, this felt like I think NVIDIA's, how back in the day, America versus Russia fought like all the time proxy wars. They never fought each other, but they would just fight proxy wars. I kind of feel like China and the US are fighting proxy wars, and NVIDIA is the stepchild being caught in the middle of it. They're just being used as to push headlines on the tariffs, on the trade war side of the equation. And NVIDIA is getting caught up in it. But that news story is a 2-year-old news story. And came out on Wednesday, and it was the story that really broke the camel's back this week, Mark. Because it was, Friday was a capitulation day, but we don't have Friday. I'm telling you right now, I was day trading on Friday morning. We don't have Friday. If on Thursday we don't finish underneath the 9 EMA, we don't have that. It does.
And you don't finish under the
it was the combination of a clean support break intraday on Friday. The market didn't even break intraday support on either one of the economic reports on Friday. It was 30 minutes after the cash opened that the market broke a support level because it fought back up into that 9 EMA and got blasted. We don't even see Friday's capitulation day if it isn't on this fake news headline coming out of the Financial Times. And so, it's the environment.
It is the environment, but this is how it played out this week because of the tech-heavy nature of the indices. That headline came out. Semiconductors couldn't catch a bid. Tech sold off, and people could say it was this and that. That was go track the price action on semiconductors and how tech followed. And then the rest of the week just was, all right, you couldn't have held a bid additional.
So we can blame the Financial Times out of China for all this.
For the end of the week. And if you have a margin call on Monday, it started with
it started with Financial Times on Wednesday, guys.
It started with it is. That's how this week played out.
Mark, I watched that price action like a hawk all week long on intraday timeframes. We do not have Friday's capitulation.
You don't have Friday if it wasn't for the Financial Times article on Wednesday.
Doesn't happen.
I believe that.
It doesn't happen.
You don't have an up day on Friday, but you don't have the
No. You have a doji day. Like the market's not partying. Last week we didn't get great data. It's not partying. But on Wednesday, very important, we were at the 200-day moving average on the SPY mark. We were at the 200-day moving average. You're fighting Wednesday morning for that 200-day moving average. News report comes out, algorithms take hold. Then on Thursday, look at this. On Thursday, you have that doji candle underneath the 9 EMA, which shifts the probability to the downside. You come out here on the 30-minute chart. Mark, this was that support level I was talking about on the intraday time frame. You can see it on the ES a little bit clearer. But there was a very, very good support level right here that was set on the European hours. I was looking at it obviously over here, but Mark, look at that clean break there. You don't have that clean break with nothing to the left of the chart if you don't have the Financial Times right here violate that support level.
I know.
I'm telling you, I know people when they're looking at the market this week and they're thinking about the consumer confidence
that it was all about tariffs,
the tariff conversation. We do not have this without the NVDA fake story out of the Financial Times.
I believe that with all my soul. I think that is exactly how this week transpired. I think the week is told through the news. Mm-hmm. Like it just is.
This week is.
This week was. Not every week will. Next week probably will too. Except for one gigantic fake out where the market does exactly the opposite of what you think it will.
Listen, if we gap down on Monday and we fake up and recover, I think that's gonna be.
That's my base case for Monday. Depending on that. All right, a couple positive.
I don't know what's Monday's gonna happen until I see those news stories on Sunday morning. Honestly, I think that's important.
Just a trio of news stories this week that just reaffirmed to me because, more and more of my portfolio from a credit perspective and eventually from just an ownership will be in technology based on this sell-off. I'm in. And just some stories reminding Amazon this week expanding in its AI integration, right? The use of generative AI to test new shopping and health-focused chatbots. A reminder to me that as companies like Amazon, which will be at the forefront of the integration from a practical level, things that they either purchase, acquire, use, or develop themselves, will make a more efficient business. Amazon already a moat of moats that they will write 1,000 years from now. 1,000 years from now, they will write about the Amazon moat as a textbook of what a moat is. Right, from a consumer perspective, right? The stranglehold they have.
We're assuming a lot of things over the next 1,000 years.
I like to assume things over 1,000 years, but anyways,
I just went through my Star Trek philosophy over the next 1,000 years there.
Well, listen, Amazon will probably be destroyed in the Great War of 2332, but that's a story for a different day.
I think
they'll write about the moat from this day. They won't survive that war, but they'll write. So what did
I
you?
think Amazon's very interesting here. We broke down the Mag 7 in detail on Thursday during the Traders Lounge, and it was Amazon and Meta that kind of stood out a little bit more than the other ones did. Obviously, Friday's candle kind of threw a monkey wrench into everything, but when you're looking at the overall picture here on both Amazon and Meta, if you hold here and you work back up into resistance, those are traditional W formations. And so I don't really have an opinion today based on the price action.
It's really funny how a chart with a big red candle can change real quick depending on what the next candle is.
Oh, I don't have an opinion today, but I will have an opinion tomorrow if it does. You know what I mean? Like
exactly.
If you can work off that volatility and all of a sudden start working back up into resistance, Mark, there's going to be some. And this is the thing that I know it's happening. I just don't know the time frame. I don't know if we're going to see it this moment in time or down the road through earnings season. I just know we're going to get some picture perfect reversals coming out of this. I just don't know the timing of that. I will tell you right now, if 550 on the S&P 500 holds, it means Meta holds its support level. Amazon holds its support level. It means you start working back up into resistance. And at that point, you can start embracing continuation versus reversal.
Yeah. Next story is Google talking about quantum computing. Julian Kelly, who works for Google's quantum AI, has predicted that practical, I thought this was a key word, quantum computing applications could emerge in the next 5 years.
They said real life application.
Yeah, like this is like not just, hey, we've made
another they're already testing stuff.
Big stride. And this has been one of those within, tech investing circles, one of these debates. Jensen Huang came out very like, hey, it's a million years away.
Yeah, I was going to say he got made to look stupid on the Google comment, in my opinion. Like Jensen came out and said some negative things about quantum last week. And then he came out as like, oh, I didn't even know there were stocks in the market on quantum. I'm like, okay,
backtrack. Come on, dude. Like you're a rock star.
Jensen, you're a rock star, but are you starting to buy into your own hype a little too much, Jensen? Like that to me. And then when Google comes out and says, no, practical applications within 5 years. Practical application of Google is within 5 years, and Jensen doesn't even know it's existing.
That's not good luck.
And that's a really, 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 really bad look for a rock star in the tech space. You've been signing too many things. You've been thinking about your own reputation too much. You need to get back to the drawing board here. That I didn't like that comment out of him. I'm going to be real. I didn't like it. And I love Jensen. I think he's a great CEO. I think he's one of the most visionary leaders we have in the market today. But I also have seen him acting like he's a punk rock star in the 1980s lately. And so, maybe get into the R&D room a little bit, maybe realize quantum's not 30 years away, and maybe realize there's 4 stocks in the market already that focus on quantum. Like that was just a bad look for somebody who should have known better.
I mean, all I know is on technology in general, I'm a believer in mega cap tech moving forward. This sell-off,
I don't care where the sell-off ends. Everybody should be interested.
Yeah, like right. It's been tactical for me up to this point, Matt. You go much lower, it will start I'll just start adding incrementally. I'll just start adding.
Meta and Amazon are tactically, they have pattern development at the 200-day moving average, either under or above. Let's go through that development. But there is a point on like Google, for example, where you start getting into 150, for example, maybe 140, for example. Don't you have to see that more through deep value opportunity?
I don't know how you don't. And once again,
Google's the best valuation out of the Mag 7, by the way.
And I could rattle off all kinds of valuation relative to the market. Technology stocks compared to your average stocks are at one of their lowest valuation levels in a long time. The quality of the company hasn't changed. The innovation hasn't changed.
If we're overextended going into their earnings week, if we're overextended to the downside, I might break some rules.
well, my rules don't involve
Mine do.
having to find a bottom. Yours don't, but it's just there is a point.
Well, no. I was talking about not only having to find a bottom because I have technical rules, yes, but I was also referring to getting involved in front of earnings. Because if Google's at 140 going into their print, they're overextended on every time frame.
I absolutely am bearish on your average stock, but I am turning bullish on mega cap tech. Your average stock I still think has a lot of headwinds. Mega cap tech is starting to really stand out, and that story might get worse technically, but I think it gets more compelling as it does.
I think there's interest in mega cap tech. I just think, again, for me, the technical stories is going to do the telling for the most part.
Fourth story is my Chinese automaker BYD reporting a record for annual revenue, surpassing Tesla's annual revenue as they continue to do laps around Tesla on battery automation. This is my Chinese versus American moment I get in the podcast each week, as long as there's news to support it. If there's not news, I just won't report on it.
BYD, big ups to them. They have great technology.
They've been doing well, but Tesla has been in the news, all that. Most, and I wanted to just mention on BYD, but most analysts on the auto tariffs universally are like Tesla's a winner from these auto tariffs as far as just
Tesla is insulated more than GM, Ford, Stellantis,
all of them,
legacy automakers. They are insulated more. That will most likely help Tesla because, Mark, it's going to take GM 5 to 10 years.
Yeah. This is not
it's not
a quick process,
short thing. Tesla is not that. And so they're a little bit insulated. Number one, the BYD story was negative because obviously China, but let's face it, Mark, American companies that rely on China are going to be pulling back over the next few years, in my estimation.
Of course they are.
They have to. They don't have
relations are not going to get better.
They're not getting better.
It's massive technology war.
Oh, there is a massive
trade war. China doesn't
war
even respond to the U.S. really on the trade war. China hasn't really even responded. Like in 2019,
why would they though?
Yeah, 2019 they would be uppity. They'd be like, "Oh, we're gonna."
Well, that's because there was actually actions happening. Like most of the last 30 days has been just debate more than anything. China, they play the long game. Like they're not going to come out every single day. And I don't even think they're going to necessarily care that much about the short-term tariff conversation in general. But I'll also say this about Tesla. I think Tesla is if you're buying Tesla in this correction, you're not buying it because they're going to have growth on vehicle deliveries. Like that's not the reason you're buying Tesla. If you're buying Tesla because you think they're going to have growth on vehicle deliveries, it's like they had their first contraction in the company's history last year, and they have the worst political environment that they could ever even think of. If you're buying Tesla, you're thinking robotics. If you're buying Tesla, you're thinking robo-taxis. If you're buying Tesla, you're thinking XAI and their AI adoption. If you're buying Tesla, you're thinking FSD. You're thinking, Mark, it's not that different than when you're thinking about Google or when you're thinking about,
it really isn't,
Amazon or yes, they have vehicle. Yes, the legacy vehicle part of their company is chiefly important. I'm not trying to say it's not. What I am saying though is if you are embracing Tesla at this point, that's the cherry on the kicker. You're buying it because you believe in the robo-taxi FSD growth story that Cathie Wood and others have embraced out there. And so I just think the BYD story was cool for BYD. I'm not sure it has a lasting impact on Tesla from an investor perspective when you're looking at the causation and the reasons why you look at Tesla today.
There is almost not a week that Tesla isn't on the news in a conversation worthy perspective.
He's one of the president's closest advisors. He's going to be in the news until he's not one of the president's closest advisors. It's just how it's going to be.
All right, final news story wrap up podcast. Got a Diamond Hands, Roaring Kitty, GameStop, and there were a lot of fifth stories I could have chose, but this was just fascinating price action, in the midst of the news flow. They announced that on pretty decent earnings, like that they had some very, favorable metrics, but the big headline things was that they were going to go the micro strategy route and start purchasing Bitcoin. And then they told the market on Thursday how they're going to purchase Bitcoin
with your debt,
with your money, with your shareholders.
We ain't going to use our money. We're going to use your money.
And the market was like, oh, yeah, that's not going to work.
I get it. I understand it. To a certain degree. I just don't understand why you messed up your best earnings report in legitimately years.
It was a solid, legitimate earnings, right?
Mark, it was their best earnings report in years. In the last year, and this is symbolic of the last few years for GameStop, negative 12 cents, 1 cent, 0, and then 30 cents. You come in with 30 cents, you beat the expectation by a bunch, you gap up. People are excited about your company again. I'm talking breakout analysis at 30. Later on that day, you say, yeah, we're going to do, with all this positivity, we're going to promise to dilute your ownership a ton by 2030 because we're going to buy Bitcoin with it. And it's like, I can buy Bitcoin myself. I don't need GameStop, a gamer company that my kid goes to own Bitcoin for me. Like, I just, like, I got it. But after thinking about it for a while, meaning 3 or 4 seconds, it was like, this is stupid. Like, okay. So GameStop had one of the biggest roller coasters it's had recently. I mean, 25 to 30, back down to 22. It's meme stock all over, baby.
Yeah, listen, I thoroughly enjoyed the podcast with you, Matt.
Me too, brother.
Wrap us up.
Yeah, if you enjoy the podcast, guys, best way to support the podcast is to give us a like and share. Tell somebody about it. We always love our community and hope you guys love the podcast as well. Like I said, we got a Master Trader event coming up very soon, April 7th and 8th. Definitely check it out. You can get access to the Master Trader Workshop for free by signing up for a free trial membership of the Tackle Trading Pro membership and get access to all the goodies that our pro members love. The traders lounges every single day where we're breaking down the market, answering your questions, the newsletter. Definitely check out the Trading Justice newsletter. We had a great edition this week, Mark. I just felt like the newsletter the last 3-4 weeks in this moment in time where we're dealing with the volatility, it's been really accurate in kind of, because we don't just talk about what happened in the week. We talked about what we need to see moving forward, what we expect to be moving forward. And so definitely check out the newsletter. If you're pro, it always goes to our pros Friday night. Traders Report as well. Then we got the coaches show on Tuesday. Guess what we did on Tuesday? Other educational companies, Mark, they go out there and they put on these massive webinars. We do it too. I put on a lot of webinars at Tackle, but a lot of times we call that a random Tuesday at the pro membership, because on Tuesday night, on last Tuesday, all I did was talk about and teach basic Forex trading and day trading in the Forex market. Guys, this is what we do in our pro membership all the time. That's why we say we are the #1 rated financial education company in America, because we put the education in the application at Tackle Trading. And so you can get access to all of that, free trial, and also come and join us in Master Trader. And with that said, I hope everybody has a wonderful rest of your week. If you need anything from us, hit us up at Team@Tackle Trading. Hit us up in our Discord channel. You can also ask any question, statement, comment on the YouTube channel as well. I will be answering those if you have them on this podcast. And with that said, you guys have a wonderful week.
Have a great week, everyone.